The economy, as we all know, is so important to our everyday lives, both to our employment and our personal prospects, but also for the opportunity set that the market has to operate in. Right now, in aggregate, as you can see on the chart above, the signposts that we really measure for all look pretty positive. Dating back to basically for the last 4 years, the economy has been very strong and very resilient. It's only been really the first quarter of last year when tariff policy kicked in that we had any hiccups. In fact, those hiccups were really just brought about by an imbalance between imports and exports and with tariff policy, but the consumer has stayed so resilient and is really what's driving the strength in the economy right now. Kicking in right now has been a lot of the benefits of interest rate policy over the last 12 months or so, as our Federal Reserve embarked on a rate cutting campaign in 2025. And while we're holding tight recently on rates, it's likely that there might be one or two cuts ahead of us. And even if rates stay neutral or drift lower, that's going to be a big stimulus for the economy. We also have the One Big Beautiful Bill Act, which has a lot of policies kicking in 2026. As the chart shows, a full percentage point in GDP activity is expected in the first half of the year from the benefits of that bill. There's a few things that we want to keep an eye on. One, of course, is the labor market. If you remember from the dashboard we showed earlier, one of the slight negatives at present is labor sentiment. Part of the reason why the Fed kicked off on the rate cutting campaign last year was because of some ambiguity about the health of the labor market. So as you can see on the chart above, the unemployment rate is 4.6% and probably over the last couple years has risen almost a full point and a half. And typically that has been some cause from concern in the past, but we just don't see it in the numbers yet. More of a longer term worry that does play out from time to time in the market, and that's around the federal finances. The budget last year really showed about a $1.8 trillion deficit, which has added to our about $40 trillion total national deficit. And so that just raises questions day in and day out about where our finances are headed and how we ultimately can service this debt over time, which does raise some questions typically into the market.